Hi, welcome to yet another episode of YIN's Squawk Box. This episode sounds more like a pet talk for some of the traders out there, and just to calm ourselves a little bit and remind us that we're in an uptrend. So enough of that, let's get started with the chart. Right in front of me, I have the S&P 500 ETF Trust. We're at all-time high, alright? I'm looking at 418, and that's the closing for today. The high of the market, it's about 422, 423. So that's the high of market. Let's put a vertical line. Boom, right on that day. And I think today we opened almost there too. So let's put another vertical line. Something like that is quite interesting. Because if this thing breaks the next 2 days or 3 days, we're going to be hitting an all-time high. So that's going to be kind of like an exciting movement going to that direction. And I think chances are we're going to hit there sooner than you expected. So that's kind of something I want to toss at you guys up front. Meaning what? We're still in a healthy market. As of this moment, I'm looking at maybe a small correction, a healthy amount of volatility, and just slowly grinding up from here. I'm not expecting a big drop anytime soon. And overall, this uptrend is still intact. So that's important to mention because we came a long way, right? Last year, during 2020, that's late of March, we have this dip that we've talked about many times. Let's put a vertical line. That's the bottom of the market. Now, this type of bottom picking is more of a luck than skills. Me personally, I did not get involved on this day particular. I get involved on the 2 weeks before and after. In other words, I get involved with this range here. So let's put a trend line. Let's put another trend line. That's kind of the range that I got involved. Let's put a horizontal line. And around 245 is about my average price of my alpha investment positions. And I've been sitting on this position all the way to today. I barely touched any of them, and it's kind of been playing out well. Now, I understand that not all of you got involved on this day. But if you look at the chart, it's kind of against what we saw, right? Because there's a huge spike of volume, right? If you're on this area, the volume is about 50 million shares, 60 million, 70 million shares. But then if you're on this couple of days, the volume spiked to 250, 260, and 270 million shares. So in reality, there are more people involved in these 2 weeks than you probably imagine. And something like that just worth our attention. And if you're a money manager, this is kind of the area that you should realize to be able to get involved. So pretty much after March, we're in a market behavior that is just straightforward uptrend. We came a long way, but it is still an uptrend. We're solving problems slowly. Business are trying to open. We're trying to tackle this COVID situation as much as we can. Some of us suffered, but overall, I will say that the economy should be better off on average. So something like that is worth our attention. Now let's talk about what you should be getting involved at recent timeline. So a couple of interesting names that I want to point out is, first of all, transportation. I'm personally involved in Uber as well as Lyft. I think they're both doing very healthy. That's the chart for Uber. As you can see, it's coming down a little bit, moving average trying to catch up. Now this is a healthy correction. I'm expecting this name to make higher highs from here. And during pandemic, this kind of trend line is quite clear. If you're a trader, you realize that's a wedge pattern. As a breakout on this day, then the stock pretty much should be able to get back into an uptrend from here. Let's check out Lyft. Lyft chart shares similar pattern as Uber. If you watch carefully, that's going to be our wedge pattern that we've been talking about. Boom. On this day, we're breaking this entire downtrend all the way from IPO. So something like that is quite important. If you're a trader looking for transportation, Lyft is kind of the name that you should be getting involved. Pretty much after this day, the beginning of November 2020, you should realize to get involved. This name is hitting the uptrend from here. As we recover from COVID-19 and people start to going out, I believe this is going to be a go-to name from here. Another name that I recently got involved is actually Bitcoin. Now people say that, oh, there are lots of downside with Bitcoin, very risky, no intrinsic value. All of those arguments I completely agree with. I don't really have a fundamental thesis going in this name. I do have an AI assistant calculating the probability of the price behavior of this name, and the probability that this kind of pattern happens is not that much. So if I were an investor, I would think this is kind of like a first wave of dip, a bigger correction that you can probably expect from a new product in the market like this. And again, not a whole lot of fundamental thesis going on there, but from purely stochastic behavior, this is a buyable area. Now, I'm not saying that all of you guys should just dump all your savings into this name. That's not the claim that I'm trying to say. What I'm saying is, if you feel like 3 to 5% of your portfolio is in cash, and you want to capture some of the volatility to have some sort of diversification, this is going to be a good go-to name that you can go. It's not that liquid, so I wouldn't recommend you to jump in and just start buying a lot of Bitcoins, because let's face it, right? One Bitcoin, it's like $36,000. And that's not something that you want to just buy a few or buy a dozen, right? You want to keep your position small, you want to keep your risk tight. And that's kind of how I got involved. I didn't buy heavy at all, just full disclosure. I think the exposure is no more than 5% of this portfolio. That being said though, I do think it's a good guess. It's a calculated trade, trying to target some sort of bottom. The risk reward ratio also looks pretty nice as well. And that's kind of the position that I'm taking. Other than that, I'm sitting on my long-term investment. NVIDIA is kind of like a go-to name that I've been sitting on. Now, what's interesting thing here is this is actually a standard textbook bull flag. If this is difficult to see, you can look at weekly chart. That's probably a better bull flag. Let's put a trend line. And let's put another trend line. And if this area breaks, I think in this week, particularly somewhere in March 2021, that's kind of like a buyable spot. If you want to be involved with large cap tech stocks, this is kind of like the go-to name that I think it's worth your time and energy. Overall, this name is extremely healthy. There is a strong fundamental thesis. This name is the leading name in microchips. They've been making GPUs, and they're the dominating company in the gaming industry, as well as parallel computing, and they support a fundamental advancement of the entire deep learning industry. So it holds a certain amount of weight in the market, and I do believe this is an important name to hold if you're looking for large cap tech stocks. Amazon is holding still. We had a little bit of fake breakout on this day. Let's put a horizontal line, and then that's the bottom. Let's put a trend line. That's kind of the range that we're looking at. Right now the stock is in the middle of the range, so I'm not expecting too much of what's going on here. Maybe a couple of more days of volatility going on, and eventually the stock should be able to come back up to 3,500 and potentially break all-time high. This is a standard textbook bull flag. It implies a direct continuity of the uptrend in the stock market, and I believe there is a lot of potential going on from here. Another name I want to land on is Tesla. Now, if you look at daily chart, Tesla has been going down, right? That's the all-time high. Let's put a horizontal line. We have this dip in early March. Let's put a small trend line, and that dip has been holding on this day as well. So let's put a vertical line. I think that's kind of an important signal. I'll be watching very carefully above this 500 level, perhaps 520 all the way to 530, something like that is important. And then we also have this seemingly downtrend from here, which I actually think is just a rather big wedge pattern. And if you look at the weekly chart, and it's probably trying to set up some sort of inside week or inside day type of situation, or potentially even an inside month. If you're looking at inside bars, that's kind of the pattern that you're looking at. And once it's consolidated, we're looking at another uptrend from here. So that's pretty much what's going on in the market. I hope you like it. I hope you're doing well the beginning half of 2021. Hopefully you recover just like most of us do from COVID-19. And I hope you guys have a lovely summer. If you liked the video, give it a like and hit that subscribe button. And I'll see you in the next episode.